Welcome back to the channel where we break down complex financial dreams into actionable reality for everyone. Today we are tackling a massive question. Is the FIRE movement actually realistic for a normal person? FIRE stands for Financial Independence Retire Early, and it has taken the internet by absolute storm recently. Imagine waking up at age 35 and realizing you never have to work for a paycheck again. For many, this sounds like a pipe dream or something reserved only for Silicon Valley tech geniuses. But the core philosophy isn't just about being rich, it's about reclaiming your most precious resource, time. To understand if this is possible for you, we need to look at the math of early retirement. The movement was largely popularized by the book Your Money or Your Life by Vicki Robin and Joe Dominguez. They taught us to view money not as currency, but as life energy traded for every dollar earned. When you realize you're trading hours of your life for a coffee, your perspective on spending shifts. The first pillar of FIRE is the 25 times rule, which helps you calculate your freedom number. If you can save 25 times your annual expenses, you have reached the theoretical point of financial independence. This is based on the Trinity Study, which suggests a 4% safe withdrawal rate from your portfolio. For a normal person earning a median salary, saving 25 times their expenses feels like a mountain. However, the secret isn't just in how much you make, but in your personal savings rate percentage. If you save 10% of your income, it takes about 51 years to retire from scratch. But if you can jump that to 50%, you could be retired in just 17 years total. This is why lean FIRE advocates focus so heavily on extreme frugality and cutting out all unnecessary costs. They live in smaller homes, drive older cars, and master the art of the DIY lifestyle to save. On the other side, we have fat FIRE for those who want a more luxurious retirement lifestyle. This requires a much higher income, often involving side hustles or high-level corporate careers to fund the gap. Then there is Barista FIRE, where you save enough to quit the corporate grind but work part-time. This allows you to maintain health insurance and some income while enjoying significantly more free time every week. But let's get back to the 35-year goal. Is it actually feasible for a regular 9-to-5 worker? If you start your career at 22 and want to retire by 35, you only have 13 years. To achieve this, you would likely need a savings rate of roughly 65% of your income. For most people living in high-cost cities, a 65% savings rate feels almost impossible to achieve today. You would need to live far below your means, while aggressively avoiding the trap of lifestyle inflation yearly. Every time you get a raise, that money must go straight into your brokerage account, not a car. This is why it's vital to start building the habit of investing as early as humanly possible. Compound interest is the eighth wonder of the world, as Albert Einstein is famously rumored to have said. Even small amounts invested in your 20s can grow into massive sums by the time you reach 35. Let's look at a realistic example of a couple earning a combined $100,000 per year after taxes. If they live on $40,000 and invest $60,000, they are on the fast track to early freedom. Within 12 to 15 years, their portfolio would likely generate enough passive income to cover their basic needs. But this path requires a level of discipline that most people find uncomfortable or even socially isolating. You might have to say no to expensive dinners, tropical vacations, and the latest tech gadgets every year. This brings us to the psychological side of the FIRE movement and the why behind the journey. Many people chase FIRE because they hate their jobs, but that's often a recipe for early burnout. Retirement isn't just about escaping something, it's about having the freedom to move toward something you love. Without a plan for what to do with your time, retirement can lead to depression or boredom. famous FIRE blogger Mr. Money Mustache argues that work is still necessary for a fulfilled human life. The difference is that after reaching FIRE, your work becomes optional and entirely on your own terms. You can volunteer, start a low-profit passion project, or simply spend more time with your growing family. Now, we must address the risks because the stock market does not always go up in a line. A sequence of returns risk means a market crash right after you retire could ruin your long-term plan. This is why many FIRE followers keep a cash cushion of 1 to 2 years of living expenses. Inflation is another silent killer that can erode the purchasing power of your 4% withdrawal rate. You must ensure your portfolio is diversified across low-cost index funds and perhaps some real estate assets. Index fund investing is the cornerstone of the FIRE movement due to its low fees and historical reliability. By owning a piece of the entire market, you bet on human ingenuity and long-term global economic growth. Real estate can provide a hedge against inflation and offer monthly cash flow that stocks sometimes lack. Many normal people achieve FIRE by house hacking, living in one unit of a duplex while renting the other. This effectively eliminates their largest expense, which is housing, allowing their savings rate to skyrocket instantly. It's about being creative and looking for arbitrage opportunities in your own life and local community. So, is it realistic for you? The answer depends entirely on your willingness to deviate from the norm. If you follow the traditional path of earn more, spend more, retiring at 35 is mathematically impossible. But if you choose to optimize your life and prioritize freedom over stuff, the doors swing wide open. Start by tracking every single penny you spend for the next 30 days to see where it goes. You will likely find leaks in your budget that are providing you very little actual happiness or value. Redirect that leaked money into a low-cost S&P 500 index fund or a total stock market fund. Start building the habit of investing today, even if it is only $50 or $100. Consistency is far more important than the initial amount when you are first starting your financial journey. Automate your investments so that the money leaves your bank account before you even have a chance. This pay yourself first mentality is the hallmark of every successful person in the FIRE community. Education is also a form of investment. Keep learning about tax-advantaged accounts, like the 401k or IRA. These accounts allow your money to grow tax-free or tax-deferred, which speeds up your timeline significantly. Don't let the fear of a 35-year retirement goal stop you from aiming for a 45-year retirement goal. Even if you don't retire at 35, having a massive nest egg gives you FU money for life. It gives you the power to walk away from a toxic boss or a soul-crushing work environment. That peace of mind is worth every sacrificed latte or upgraded car model you passed on. The FIRE movement isn't a get-rich-quick scheme, it is a get-free-forever strategy for the disciplined mind. Are you ready to take the first step toward your own version of financial independence this year? Leave a comment below with your target retirement age and one thing you're cutting from your budget. Subscribe for more deep dives into the math of freedom, and I will see you in the next video.